Hey there, it's Dean O'Dell with 7 Gables Real Estate and the O'Dell Group. Today is March 4th. Wow, this 2 months down already. Well, let's talk about what's going on in this market. We got some charts and graphs to go over. We're gonna be talking about the Orange County market today. Okay, let's talk about the active listing inventory. So what we're doing now a lot of times is we're talking about before we had gone through what we went through, which I'm just gonna call the big C, right? We all went through the big C together, and that changed the pattern of the traditional home selling season. So now that we're getting that a little bit behind us, we're kind of starting, or at least hoping, that we're gonna get back to a normal flow. So just to demonstrate how things have changed, I'm going to tell you the 17 to 19 numbers, 2017 to 2019 numbers, and then I'm going to tell you how this year compares to last year. So starting with the active listings, okay, currently there are 1,358 homes listed in Orange County. That is not a whole lot. Last year at this time, there were 2,438 or 1,080 more homes on the market. Now, if we go back and we look at the 3 years of 2017 to 2019, normally we would have almost 5,000 homes. The average is 4,977. That is 3,600 homes more than what we have right now. That just goes to show you how low inventory is. And mind you, that was considered low even in 2017 to 2019. When we were in a bad market, we had 18,000 homes, okay? So this is how much things have changed. We are at historical lows. Okay, so let's talk about demand now. Now you're gonna hear things in the news that's gonna say demand's at an all-time low. Yes, it's an all-time low because our inventory is at an all-time low. If you look, we just hit a record low of 1,990 homes that went into escrow. Now, if you recall, I just told you that there were only 1,358 homes on the market. 1,998 went into escrow. That means we were coming out of January with even lower inventory levels, and we still just keep chipping away at what that existing inventory was. Both of these are really low. As a matter of fact, demand is the lowest it's been since 2008, and we all know what happened in 2008, 2009, and why demand was so low. That was the Great Recession. This is nowhere near the same. That's like I said, we had 18,000 homes back then to sell. Now we are at the lowest inventory since 2013. And we're gonna do a little comparison to 2013 because what we're seeing here is the most similar to what we saw back then. Before we do that, we're gonna talk about expected marketing time first. Again, 2017 to 2019, 64 days to sell a home. Well, 64 days, even back then, was still considered a seller's market, okay? Not a hot seller's market, but a slight seller's market. So that just goes to show you how long it's been since we've had a normal market, because we haven't had a normal market for years and years before that. If we look at the expected marketing time now, we're down to 20 days. That ties the historical low that we had in November. So again, fast-moving market. We had increased demand in February and dwindling inventory, and that is taking down the expected marketing time. So looking at the expected marketing time broken down by price range on this chart, here's what's really crazy. It is a strong seller's market all the way up to $8 million. Look at the days on the market and look how that compares with the kind of market we're in. Anything under 60 days is a strong seller's market, and that's where we are, all the way up to 8 million. That's just amazing to look at. So let's look at the next chart. Okay, I told you I was going to do a comparison to 2013, and this chart's a little confusing, so let me break it down for you. You know, back in 2013, the trend in the rising rates that occurred eventually led to a market change. And back then there was very limited supply of available homes to purchase as well, even though it still was almost double what we have now. Anyway, the expected marketing time dropped because of the limited supply, and the market got hotter and hotter at the beginning of the year. Now, later on in the year, mortgage rates started to rise, and they went from 3.34% up to 3.63%, and the market just kept getting hotter. But as we got into the spring-summer market, all of a sudden, because rates had gone up, inventory increased from 3,183 to 4,423 by mid-June. I mean, they added 1,240 homes, which was up about 39%. And then rates just kept climbing to 3.93%. The inventory kept growing. It went up to 6,350 homes. So a typical peak occurs, during the summer between July and August. From March to October, the number of available homes soared from 3,183 homes to 6,350. It almost doubled in that short time. And that was because rates were increasing. So the expected marketing time went from 32 days to 82 days. And mortgage rates just kept going. They went up to 4.5. And in September, they finally started retreating back down to 4.23 by mid-October. And you can see how the activity started to change as the interest rates changed. So of course, we've seen this pattern before since 2013. We've seen rates go up, we've seen rates go down. Now we're seeing rates go back up again. So what we're trying to figure out here is this going to be another 2013? But our inventory is so much lower than it was in 2013, and our demand is still higher than it was. So it's really, really hard to say what's going to happen. But traditionally, rates going up will lower demand. And we've gone from rates of 2.65 all the way up to about 3.5 right now. So rates have definitely climbed. We don't know how much it's going to go up, but we will have to see. If rates start going past 4%, we could definitely see the same thing we saw in 2013. We're just going to have to see if that happens. Okay, so we know rising rates should slow this thing down. I mean, you can't just keep raising rates and having prices go up at the same time and not have some sort of effect, right? But the other thing we know is there are a lot of buyers for every house still. And that is evident from the multiple offers that we're seeing out there. It's evident from still how fast things are moving, days on the market. So it is going to take a while for this to change. We do have some wild cards out there. We have some world events going on right now that I'm sure everybody's familiar with. And we'll just have to see how that all plays out. So anyway, it's still, for you buyers, it's still a great time interest rate wise to buy a house. And sellers, from a sales standpoint for you, it's amazing. It just stays amazing. It's been amazing. But I will tell you that the conversations that I have with people that are out in the market, people thinking about selling, they're starting to change a little bit. And I haven't seen the effects of it yet, but it just tells me that there's something brewing out there that's going to change this market. I'm not sure when, but like I said, the conversations are becoming a little bit different than they were before. So buyers, hang in there, and sellers, let us help you get that thing sold. I can't think of a better time. It's been a great time, and it's still a great time. So now's the time to go. Talk to you later. Bye-bye.